Joined now by our friends, Sri Kumar, president of Sri Kumar Global Strategies, and Ryan Dietrich. He is chief market strategist at LPL Financial Research. Sri, it's great to have you back on. Let's talk about what something Steve Leisman just hit on. In your mind, how much of future rate hikes are built into the markets, both stocks and bonds, right now?
Brian, great to be back with you. I will begin by saying there is no saying how much the interest rates are going to increase. I would say to you it could be 4, 6, 8 times from where we are. And the reason is the Fed has been so far behind the curve in missing the inflation that they have to make up for it. So my expectation is whether they raise 25 basis points or 50 basis points on March 16th, it is not going to be sufficient. I would ask the question, with inflation being red hot, what prevented the Fed yesterday from having an emergency meeting, stopping bond purchases? By the way, bonds are still being bought this month. The money supply is being increased. They are buying mortgage-backed securities, pushing up home prices as President Biden is worried about home prices being out of reach. This is a Federal Reserve which is not in touch with reality, Brian. So it's hard to say. But the most important point, I will say, is the bottom line. A few minutes ago, you had the screen showing the 2 to 10 yield curve, and that narrowed to 40 basis points last night. As recently as last Friday, it was 60 basis points. We are heading toward inversion in a hurry. I think I am on recession watch, which I have been for the last 6 months, but now it becomes more urgent.
Wow. Ryan, I'll get to you in just 1 second. I've got to follow up with Sri on that because some of the smartest people I talk to, like yourself, Sri, and others, will kind of liken what's going on now to, and I won't quote who said this to me, they said the Fed is like the arsonist now trying to put out the house that they lit on fire. Money supply is up 40%. QE is still going on. Rates got cut to a level that we now know they did not need to be cut at. Does the Fed have the ability to put out this fire? I mean, you could make the argument that inflation is caused by two things. The world reopening at the same time, we know that, but also our Fed, and to be fair, other central banks all raising their balance sheets, cutting rates because, and I guess I'll give them a break on this, Sri, they fundamentally underestimated what was going to happen during the pandemic, not realizing that consumer demand would go up, not down.
Very true. I love your analogy, Brian. Let me begin by saying that not only do I like it, the Fed is trying to put out the fire with gasoline. So that is essentially what is happening. So the fire is going to burn even brighter and bigger. What is going to happen? The second part of your question, can the Fed control it? No. They cannot control it without pushing the economy into a recession. If they raise rates even 3 or 4 times, forget about 6 or 7 times, Brian, the economy is going to go into a recession just as President Biden and Democrats are going into the midterm elections.